and welcome back, dear students, on my channel Easy Learning. So today is my fourth video on this topic, accounting concepts. And today is the second accounting concept, that is prudence concept. So in my previous video, I think we have discussed about the accounting concept of consistency, and now it's the second prudence accounting concept. So it's on the page number 153 on your textbook. I saw the definition in textbook. Today what I'm going to do is, I'm not going to refer the exact definition given from your textbook. Of course I'll explain about the textbook, but I wrote a few different definitions for your understanding here, because what I felt is it is bit difficult language given in the textbook. So after listening or after watching to this video, I'm 100% sure you'll easily understand the definition given in textbook. So we'll start about the prudence accountancy or prudence accounting concept. What is prudence concept is, see what they said here in easy language. Whatever knowledge I have about the prudence accounting concept, I wrote everything here. So we'll just discuss this thing. After that, as usual, after explaining this, as usual, I'll explain few examples related to prudence accounting concept. So now, what is prudence accounting concept, or what this concept is saying? This concept is saying that accountants, they have to give the conservative figure about the profit. Okay, they should not overstate the profit, and they should not understate the losses. Okay, so accountants often have to use the judgment when preparing financial statements. Of course, accountants are the one who's making financial statements of companies, of an organization. So of course they are making the few judgments about preparing the financial statements. But what this concept is saying is, while making the financial statement or while preparing the financial statements, whatever judgments they are making, see in on that, okay, on considering that they should not understate, okay, the losses, and they should not overstate the profits. Okay, they should not overstate the profit. Okay, so these are the two things what I took from the textbook. Okay, now to make it easier for you people, what I did, I wrote a few things more on this concept. That is, this concept states that profit must not be overstated, and the value of assets must not be shown too high, okay, in the year end. So the accountant's duty is to ensure that the readers of the final accounts get a true and proper picture of the financial state of the business. Okay, in the end, see why we I think in the beginning lecture, in the introduction video, I already explained is why these concepts are taken and why these rules are made, to get the true and fair view of the financial position of the company. So this is the reason what they are saying, the reason to make this concept, or the reason to amplify this concept is the readers, whoever is the reader, as discussed earlier, that readers can be investor, consumers, even the owner itself of the company, or even the employees of the company. So whoever is the reader, they have to get the true and fair view. So what this means, what this thing means, that don't overstate the profit or don't understate the losses. I just wrote I'll explain few examples on this one, but I just wrote a simple example on this one, that writing of bad debts. We know the procedure of writing of the bad debts, because we are closing the accounts in the end, year end, okay, to prepare the final accounts, whatever is the bad dates, we are writing off if we know that no debtor is going to pay. But before writing off the bad dates, if there is small chance that the debtor can pay, then we should not write off the bad dates. So this is called as don't overstate the or don't write anything. So before making any judgments, they have to be very careful and they have to apply the prudence concept. So I'll explain. I hope you are clear with this meaning and definition concept. Now I'll explain few examples on this concept, so you will get a clear picture of this concept. I mean, like the what we can say, the same thing, so you can get the true and fair picture of this concept. Okay, so I'll explain few examples on this one. Okay, so here I have few examples. As I said earlier, that I'll explain the same with few examples. I tried my best to make it as simple as possible, because see, if you're going to understand the concept, you can do anything even in the future. So as discussed earlier, that the main point of this concept, or the main aim of this concept is, do not overstate the profit, do not understate the loss. So what it means exactly, I'll explain with few examples. One more thing, this concept is saying that never overvalue the asset and never undervalue the liabilities. Somehow these concepts are related to this and this. How? I'll explain now. See, we have an asset, okay, building. I took the example of building here. So we all are aware that before preparing the final report or the profit and loss of an organization, we have to write up the values after depreciation of all the assets. Okay, so we have a building, the book value or the initial value or the value in the beginning of the year was 100,000. Okay, so now that the depreciated value of the asset is 90,000. It means that the depreciation on that was $10,000. Okay, so beginning value or the book value is 100,000. Okay, depreciation is 10,000, and of course we are deducting depreciation always. So after that, the what value will get is 90,000. So what this concept is saying, that get the value after depreciation. If we are going to write the book value over there, okay, in the final report, okay, or in the balance sheet, if we are going to write the 100,000, this is wrong. If this is called as overvaluation of asset. So what this concept is saying, that write the book value as $90,000, not the $100,000. So I hope this thing is clear, that no, never overvalue the assets. Now never undervalue the liabilities, that never understate the losses. Okay, liabilities are the things what the company is owing for others. So Mr. X is the creditor, okay, and creditor, and we need to pay him $1,000. Okay, and after negotiation, okay, we are expecting a discount of $500. Okay, so expected discount, it is not yet clear that Mr. X is going to allow us for this discount. So it is not yet clear that Mr. X will give discount of $500. So if he is going to allow us for this discount, then the liability value or the creditor value will be $500. But if it is not yet recorded or not any confirmation from Mr. X that he is going to allow us for this discount, don't write this as 500 in the books. this 500. We have to mention in the books as 1000 because it is not yet clear that Mr. X is going to allow us for that discount. This is still expected discount, not yet the discount allowed. If he is going to allow us, and if there will be any documentation for this thing, then we can write it as 500. So I hope these two things, what prudence concept is giving to us, is clear. Now I wrote few more examples for this thing. I wrote actually one example. Through that I will explain. Do not overstate the profit and do not understate the loss. Okay, we have a rent payable of any store or any office premises or for anything. There is a rent payable, okay, of $1000. Okay, now our net profit for that year, I'll explain this from this point of view first. A, that do not overstate the profit. Okay, so profit for that, net profit for that year is 20,000. If we are not going to include this rent payable, it means we are overstating the profit. So what this concept is telling us, that do not overstate the profit. So to get the actual profit, okay, or to get the true and fair view of account, we have to deduct this 1000 from the net profit. So your actual profit for that year is 19,000, not the 20,000. From the same example, I'll explain from this point of view, that is B. Do not understate the loss. Same thing. If profit for net loss for that year is 20,000 and this rent payable we have to pay, which is still unpaid, then in that way or in that scenario, your net loss is not the 20,000, it's actually 21,000. So here what we are going to do, we are going to deduct, because we'll be paying, that's why we are deducting it from the profit. And here if it is a loss, then we have to add this 1000. So your net loss will be 21,000 and your net profit will be 20,000. So I hope these examples are clear with you all. If not, you can ask me in the comment section if you want more description on these examples or anything what I have explained today. So you can ask me in the comment section. Thanks for watching the video. I'll see you in the next video with our third accounting concept. Till then, take care. Bye bye.